Hey everybody, welcome back to the next video. And in this one, we're going to cover who moves the market and why. So who moves the market? So the Forex market is so liquid with $6 trillion being traded every day that individual investors like you and I have little impact on the actual movement of the market. So I like to look at it as like this. The Forex market is an ocean. And the role you and I play we're an occasional shower. We're a few drops of water in the ocean. So we do make up part of the whole and we can move with the ocean. However, we're not ever going to change, the flow or the direction or the landscape of the ocean at all, just being a few drops of water. So even if we all had $1 million in our trading accounts and we all made the same trade at the same time, we would still hardly move the market a fraction of a percentage with $6 trillion being traded. So because of this, it's clear that only a handful of institutions with a lot of money can move the market. And it happens to be that your top 10 Forex market participants are 10 of the largest banks in the world. And it makes sense because, well, the banks have a lot of money. So the top 10 banks make up 77% of the Forex market. And behind them, we have smaller banks and pension funds and hedge funds claiming another roughly 20% of the market. And finally, 3% of the market is retail traders like you and I, who kind of just have our own personal accounts. We're trading a few thousand, maybe $1 million. You know, account sizes vary, but that's that 3%. That's what we represent. So you might be thinking, why is this important? Why is this relevant if the market's going to move, regardless of our participation? Well, it's a huge piece to the Forex puzzle because if only a handful of institutions in the world can make these big movements in the market, these big movements in price, we want to be on their side of the trade. And as you look at this chart here, any of these big moves that you see, like this, like this, like this, and then coming back down on the other side, these moves can only be started by big banks because they're so drastic. There's no way that anybody with a retail trading account can make these moves. So we basically, banks have huge orders that they have to fill. So if you have to sell or buy a lot of things from people, you have to have someone else on the other side of that transaction. So this is why, price is going to make patterns. The psychology of it is going to convince people that they need to be selling so that the big banks can buy. And this is a huge reason why people lose. It's because they're being manipulated to go the opposite direction of where the market wants to go. And we talked about this in the psychology portion a little bit. And this is kind of what it looks like on the chart. Okay. So, this is a big reason why the Forex market is hard to read. So we'll just go through a scenario here where knowing where the big money lies can really help you with your trading. So let's get rid of this. And let's take this one away. And let's look at these moves here. So right from here to here, you had your move. And then you had price starting to go down. And again, from here to here, you had your big move. That's where the big money was. And again, it starts to make this pattern here. So what the banks are doing is this move here. Oops. Okay, this move here lets you know the direction of the trend. That lets you know that the trend is changing. This correction here confirms that trend. But during this correction, you had a lot of people starting to sell this off because they probably thought, it was still in a downtrend for whatever the reason, people started to sell. Well, once they did that, the big banks stepped in again. Right here. Okay, and then they bought it right as people were starting to sell. And then it came up to here, and then it started making this pattern, which to a lot of people probably looked like a double top. Some sort of formation. 1, 2, 3. That could be looked at as a triple top. But that's just a manipulation. Because what the banks want you to do, they want you to sell this. Sell it here, have your stop loss here. Maybe your first target is down here somewhere at the trend line, or maybe all the way down here, whatever it may be. They want you to sell this. So that when they try to buy, they're taking your stop loss order. Because when you sell this, you have to get out of the trade by buying it back. So when you close your trade, you're actually buying it back at this lower price. So when you get stopped out, it's the same thing. You're going from a sell, and then your stop loss is a buy. So that's how the banks are going to collect orders, because they know millions of people and lots of traders are short, because this formation looks like it's going to reverse this market right here. But if you play it forward, and look, right when it crosses this line, it really starts to pick up. This is because the banks have flooded the market with buy orders now, because they've taken out the stop losses of everybody who was short. Okay? And this is easily avoidable, because if you would have known that these two candles, that these large candles represent the orders that the banks have to fill, you would know that big money is on the long side of this market. They're trying to push the market up. And nothing in this price action here was strong enough to compete with the strength of these candles. So that's an indication that the move is still going up. So the whole point of this is to know that we want to be on the side of the banks, because they move the market. We don't move the market. Our beliefs do not influence the market. There's just not enough. We don't have enough money. And this is why trading is counterintuitive. It's because they're intentionally trying to get us to think one thing is happening, when in reality, you just have to follow the money. You have to follow where the big moves are. Okay? And in the next lesson, I'll teach you a specific way to know where these orders are, to know where banks are most likely to place these types of orders, so that you can start looking for them. And then once you know where to start looking for them, we can start piggybacking off of those. So that is basically all you need to know about who moves the market. It's big banks, it's pension funds, it's people with a lot more money than you and I, definitely professional traders. So what we need to do is, obviously, we don't want to combat this, because we can't combat it with anything. We don't have the right weapons. We don't have enough money to combat this. So we want to be able to identify it so that we can join in on what's happening. Instead of being short here, we could say, well, look at this big impulse here. Look at these big candles. There's someone behind the scenes, because this is an individual order. This is an individual order. This is an individual order. There are people placing these massive orders, and they want the market to go up. So let's get on their side of the trend. Okay? And the next few lessons are going to be dedicated to showing you how to do this. So thanks again, and we'll see you in the next video.